Hello everyone, and welcome to this month's monthly market update. My name is Stuart Gillin, and I'm a portfolio manager here at Baker Boyer Bank. Thanks for taking the time to join us today. And we certainly have no shortage of topics that we could cover today. As you may remember, a month ago, our Chief Investment Officer, John Cunnison, came to you via video and talked about two things: the war in Iran and private credit, right as both of those topics were breaking into the headlines. And since then, they've stayed in the headlines. As you know, the war in Iran continues, and private credit is littering financial news. We've also seen some crazy swings in the stock market, really interesting economic data coming out, and continued conversation around tariffs. It's now been 1 year since President Donald Trump announced his Liberation Day tariffs. And because of that, tariffs are back in the headlines, and there's a lot of conversation about the effects that they're having on the economy. But we can cover all of that today. That's a lot of ground. So I wanted to think about, what is it that my clients are bringing up to me most? What is it that's troubling them? And it's actually inflation. And that may surprise some of you. Inflation isn't in the headlines like it was 2 years ago. But I know my clients are feeling it, they're worrying about it, and so we're talking about it. So that's what I'm here to talk to you about today. And there are 3 reasons that I think it's coming up in a lot of conversations. So I want to address those reasons and how we at Baker Boyer are thinking about inflation. The first reason that inflation is coming up is the way we as individuals experience inflation, as opposed to the way economists and policymakers measure it and it's reported on. When you see inflation talked about in news headlines, it's often in change over the last month or change over the last year. And over the last year, a basket of goods has gone up 2.4%. So you see inflation reported at 2.4%. But that's not how we as individuals experience inflation. We think about inflation as prices tied to some date or event and how things have changed since then. So using COVID as an example, in the last 6 years, that same basket of goods that's gone up 2.4% in the last year is up 30% over the last 6 years. And we feel that. That's something that we feel when we go to the supermarket or when we're making large purchases. So even though a 2.4% inflation reports as very tame and isn't making headlines, it's still really, we feel inflation really deeply. A second reason is gas prices. And gas prices are one of the most visible economic signposts we all have. We drive by the gas station every day and we see the price up there in big letters. And it can be really painful when we go and fill up for $5 a gallon. And this is especially top of mind for those of us that are living in the Northwest, where Washington now has the second highest gas prices of any state in the lower 48. So gas prices, while they may be very emotional and very visible, it's important to note that they're not a good economic indicator of the health of the economy or the direction of the economy. And the third reason that I think tariffs are coming up a lot, the way inflation is coming up a lot, is global disorder. When we see things like war, tariffs, arguments amongst trading partners, we know that this has the ability to raise prices. Global supply chains are very complex and very efficient. And as we untie those supply chains and our new supply chains that we form are less efficient, that has the ability to raise prices. And I think people instinctively get that and are fearing that as we look at all the headlines in geopolitics today. So with that in mind, how are we thinking about inflation here at Baker Boyer? And first of all, I want to mention that we are building inflation estimates into your financial plan. We are thinking about inflation when we sit down with you and we go through your financial plan. We know that over the course of your life, you're going to have periods of high inflation, periods of lower inflation. So we are planning on inflation, and we're factoring that in as we work with you. In portfolios and investments, we really want to make sure we have exposure to 2 areas to fight inflation. The first is uncorrelated assets like real assets, and you do have exposure to those areas of the market. and they'll provide shock absorbers if we get a bout of unexpected inflation. But more important for the long run is exposure to stocks or equities. And we know that over the long run, stocks make for the best hedge against inflation. And we want that exposure to stocks to be global, because inflation doesn't hit all economies in all parts of the world at the same time or in the same way. So we want to have global exposure to stocks to hedge against inflation in the long run. So as you think about inflation, if this is something you're worried about, I encourage you to reach out to me or any member of your Baker Boyer team. Or if there's any other topic that you want to make sure we hit on and cover with you, please don't hesitate to reach out. We're always here. It's been great being with you today, and thank you for taking the time. Have a great day.